Thank you, everybody, for being here. We've had a lot of incredible speakers thus far, and we're going to be moving right into our next one. Really pumped to be hearing from some of these incredible guys that are working at some of the largest companies in the space, not only Bitcoin mining companies, but also energy companies as well. And thank you to the Ardyne guys. And we're really pumped about seeing some of this innovation, as I've mentioned a few times already up here. Innovation taking place here in America. We are potentially onboarding chip fabrication to the United States, which is not only a supply chain security issue, it is also of national security interest as well. So very excited about what they're doing and looking forward to the future at Ardyne. Up next, we have our next panel, the economic impact of Bitcoin mining. And it's going to be my good friend Nishant moderating. Nishant, all yours.
Hey, everyone. Thanks for making it. I know you had a good time last night with all the mixers going on. I'm glad you're all here. And thank you for the panelists for being here. So we'll start with the introduction of the panelists, starting with myself. I'm Nishant Sharma, the moderator for the panel today. I run a communication strategy consulting firm called Blocksbridge. We also do research on the industry, produce it under the banner of MinerMag or theminermag.com. We have a website which produces news for the industry. You can go and check it out.
My name is Trent Stout with Priority Power. We work with a number of the miners that you've seen here today, and happy to be here.
Hey, everyone. Mike Alfred, founder, managing partner of Alpine Fox LP, which is a private investment partnership focused on Bitcoin and value equities. I view Bitcoin miners as a value opportunity in this environment. Separately, I'm on the board of Iris Energy. The ticker is IREN. It's a NASDAQ-listed Bitcoin miner with a market cap, I think, right around 200 million, even though the asset base is closer to 400 million. So, again, from a value-oriented perspective, the Bitcoin infrastructure space looks really interesting right now. Thanks.
Adam Sullivan, CEO of Core Scientific. We're one of the largest Bitcoin miners in North America.
Chad Edward Harris, I am known as Giga Chad, and I'll just kind of leave it at that.
Thanks, everyone. So the topic of the panel is economic impact of Bitcoin mining. And we would like to start with the most obvious economic impact that people think about when they think about Bitcoin miners, which is the Bitcoins that you're mining. So what are the taxes that Bitcoin miners have to pay at the state and federal level, or maybe at the city level as well? And are they only mined on the are they taxed on the Bitcoins that they're mining, or are they taxed on other revenue generation streams? And what are the other areas of taxation that the audience may not be very familiar with? We would love to know what kind of taxes, all kinds of taxes, the miners are paying.
Actually, I think I'll jump into this one for you real quick. I'm not going to necessarily talk about the federal level, but Bitcoin mining, I think there's this misconception that there are two very important taxes in the state of Texas that Bitcoin miners pay. They pay tax on their business assets, and they pay a school tax. And those two taxes alone support, these rural towns. And in particular, if you look at the scenario of Riot Blockchain that's currently in Rockdale, Texas, the tax that they pay, that the Rockdale ISD receives, is significant enough to develop new programs, create certification jobs for them to actually move into facilities of like networking and those components. Why that's important is because it supports the growth of rural America. And that's ultimately, we're at a point of social economics, meaning just not economic impact for dollars and cents, but how are you going to change, how are you going to take this business and change it? And that is the one clear way, is by the amount of revenue that's created to be able to pay these taxes.
Yeah, to add on to that, miners are paying taxes on the energy that they're consuming. So for local communities that are now receiving a significant amount more taxes for their electrical grid, they're actually able to upgrade infrastructure across their transmission lines and some of their other electrical parts of their grid, which actually benefit the local community, and in many cases actually help lower the power prices for a number of local communities across America, which for us, we're mostly operating in local communities that have had manufacturing leave their tax base. And so those large manufacturing facilities were often consuming large amounts of power. And then when they left those local communities, it left those local grids to fail. And so when Bitcoin miners enter into local communities, it actually brings about a very positive impact for local communities where they're able to upgrade their electrical infrastructure and in many cases actually lower their power rates because of the upgraded infrastructure.
Yeah, I was just going to say that it's really about direct versus indirect impact. I think the direct impacts, a lot of times people say, hey, there's only 100 people or 50 people working on this facility, and right now there's only 12 people there. So it's a relatively minor impact on the community. But I think the impact is much broader than that. Like if you look at what Iris did in British Columbia is a regulated power market, so the utility has to earn a regulated return. When the paper and pulp industries left, basically the power prices were going to go up for everyday people. They were going to go up for everyday consumers unless there was a new large-scale user of power. And so Iris came into those communities and they use a lot of power in British Columbia to mine Bitcoin. It's actually better for everybody else there. I mean, obviously Texas is a totally different scenario with a deregulated market, but in Texas there's 20 plus gigawatts of power, wind and solar that mostly isn't even used because there's no transmission mechanism, there's no storage mechanism, there's no way to get it to the load centers. And so I was out in West Texas this week and there's all this power and a lot of it's just sort of sitting there. And these communities are struggling. And when the miners come in, they drive up the real estate prices, which help the real estate agents, but also the owners of the land there, as well as the utilities and all the power companies that have power that they can't monetize. And so that's the real long-term impact. I think miners make the grid more sustainable, more anti-fragile. It incentivizes the build out of more renewables, and it gives a lot of people jobs in communities that are mostly overlooked in the middle of the country where people on the West and East Coast consider it flyover country. But this is God's country for Bitcoin miners. It's beautiful.
It's interesting, Mike, you point that out about indirect and direct. If my memory serves me correctly, and I could have the percentage wrong, but in Rockdale, for every job we created, a single job that we created, it was a 3x of the indirect job that was created. And when you looked at the long-term value, it was significant. I mean, really significant. It does play a huge role.
Well, there's no faster way to clutter a room than starting with talking about taxes. So I'm glad we all stayed away from that pretty much. If we look about just the economic impact in Texas, it really starts with the energy, and economic prosperity follows, our energy demand follows economic prosperity. And so the fact that it's bringing companies to all these communities and all the benefits, it's really driven by energy, right? Texas is the number one producer of natural gas, the number one producer of wind, although a lot of it gets curtailed, and will soon be the number one producer of solar. And so it's a no-brainer to come and actually help those projects continue to succeed. And we can get into the grid benefits and other things after your next question.
Well, thanks for that, guys. So we talked about various benefits of Bitcoin mining, direct or indirect, and we'll get more into it during the remainder of this panel. Now, how can the local or state governments attract more miners? Like, what kind of regulations could be better to make it more efficient? Maybe the way taxes are paid. Maybe the government can look at the longer term benefits and maybe compromise the short term gains. So what could be such regulations that you wish or you hope were there or that could be improved?
Yeah, I mean, I think one area, especially when you look at Core's portfolio, so we're operating 7 facilities across 5 states. 3 of our facilities went into previously used facilities for other purposes. So we're in a thread factory, we're in a wire manufacturing facility, and we're in an old steel mill. And for us, when we looked at sites, it was mainly looking at zones or areas where traditional manufacturing had left. And so for us, a great regulation that would benefit local communities in a way that many people don't realize is if you invited Bitcoin miners into locations where large manufacturing had left, which decimates local communities. There's plenty of examples where when manufacturing leaves local communities, there's a significant loss of jobs. And, that's not only unfortunate for the people that work at that facility, but all the ancillary benefits of those high income earners. And so when Bitcoin miners enter those locations, they provide an immediate economic impact to that area. They're high paying jobs, they're skilled jobs, they have training. Those are all things that are extraordinarily beneficial to the local community. And if there was regulation that actually brought miners into locations where manufacturing has left, which is all across the United States, unfortunately, that would be a net positive for many local communities.
I was just going to say that the challenge, from a risk standpoint, from the investment standpoint, from a capital allocation standpoint, is that these miners are making like ultra long duration investments. Like, obviously there are different business models. There's some sort of more asset light, but I'm talking about the heavy duty infrastructure providers like Iris. They buy the land the vast majority of the time. They build buildings that have 30, 40, 50-year lives. It's heavy-duty infrastructure. It's building the substations, connecting to the grid. That asset should have value for 30, 40 years. And the challenge is you have this long-duration investment cycle, but the government's going to turn over more frequently, and cultural biases are going to turn over more frequently. And that's when you're considering geography for investing. That's why Texas is such a great place, because I think people just have a sense in the back of their mind. Forget about what the laws and the regulations say today, but they have a sense that Texas is not going to mess with the free market, right? They're going to allow these companies to make these investments and make the world better. And you can't be so sure about that in the Northeast or the Northwest, irrespective of what the laws and regulations currently say. So there's kind of a game theory component to this. And again, that's the biggest risk, because you don't want to deploy $1 billion of capital into a state that's going to change the rules tomorrow on you.
So the question about regulation, I don't think it's what can we put out there to incentivize miners. It's the opposite. Is how do we protect miners for not being treated like everyone else? And so as a board member of the Texas Blockchain Council, that's what we fight to do every day, right? We fight with the legislators, we educate, and we ensure that it's a level playing field. You don't get to decide who uses power and what they use it for. That can't be the discussion. The discussion is they're a company like every other company, and so it's protecting them from not having rules and regulations that are different. And it is a conversation, and everybody that's here, thank you for your support, because you're helping just by supporting this event. Fight that fight, fund that fight. I see lots of faces. We participate in this stakeholder process every day. We've got members from ERCOT here on stage. We've come a long ways in 3 years, but it is a street fight every single day to ensure that bad headlines don't go out, get everybody riled up over things that are completely misinformation. And it's about education and working with the government agencies and like ERCOT and the other ISOs, and ensuring that we have a place to mine and we can use power responsibly, and convincing them that we're the best partners to be doing this with, because we are responsible and we're good citizens of those places that we mine in.
Similar to what Core is doing, where they've gone into, pre-existing locations and refurbished it. If you look at any of the tax credits that are out there, incentive programs, if there was more liberty, like just let's say in the state of Texas, if they looked at something and said, hey, if you go into XYZ in this rural area, into an abandoned facility, we'll give you the following. So if you're thinking about a specific thing, there's a thing, and that's an exact thing that can happen. And Core's done a great example of literally repurposing an existing old structure and putting it back into play, and then reincorporating a workforce in that area.
Have there been such initiatives, whether Core benefited from such initiatives where the government wants to encourage more businesses such as mining to come to the state and operate, or maybe you're aware of, have there been such initiatives that government has undertaken to develop these areas by encouraging any business, not just mining?
Yeah, there are definitely initiatives inside of each of these states to promote people to come to the state. And so, we've taken advantage of some of those opportunities. But for us, it's where we're operating in rural Georgia, rural North Carolina, rural Kentucky, rural North Dakota, and rural Texas, right? And it's like we're in locations that require a large workforce to operate these facilities. And so looking at incentive programs that could allow for bringing people into the community, because for a lot of these communities, we're drawing from a majority of the population that exists in that local community. And so most often when we're speaking to a number of our employees in these data centers, we're drawing people from outside that town, outside of that county. And we're bringing a lot of people in to communities that have been losing population for years. And so for us, it's a big part of that is when we speak to the state, when we speak to the local county, explaining to them that we're bringing jobs not only to the local community, but we're also bringing net new people into the community, which is a very important thing for many of these small counties.
Often people talk about how mining is not a labor-intensive industry or a business that is not labor-intensive. But is that true? Because there are indirect jobs that mining creates. Could you elaborate more on that? Maybe you have anecdotes to share where your businesses or operations that you're familiar with or affiliated with or partnering with created such jobs, not just direct, but indirect, whether it's ancillary units or just contractors, vendors, etc.
I mean, I think the best example is that there's numerous accounts over, early on in Rockdale, Texas, where senators and congressmen would walk in, look around and say, there's actually people here. And they didn't understand, anytime that you have a large business, a large scale facility, large structures, any of those, there's people. And that's when I think, if I remember correctly, is in late 2020, early 2021, where all of a sudden they started paying attention. They started realizing that there's jobs. They start realizing the secondary economic benefact that happened on the sales tax side to those towns. And that's kind of where their wheels started turning.
Yeah, we actually hosted a tour yesterday at our Denton facility, which is just outside of Dallas. And the reporters that were there all kind of said the same thing. We're surprised how many people are working here. They're walking through our facilities. They're seeing our data center technicians working on the machines. They're going to our repair center, seeing all of the folks that we have in our repair center. There's plenty of management team members that are there working and operating in their offices. I think what they had in their mind was there's 5 people there taking 100 megawatts of power. When in reality, it takes an army of people to operate all of these machines. It takes training to get these people qualified to operate on these machines. And people are growing inside of a company. What they expect to see is just, temporary labor scattered throughout a facility. What they're seeing are people that have worked for our company for years and have grown inside our company. And those opportunities exist for people to grow not only from a data center technician, all the way up into management levels, but into the corporate roles as well outside of the data center. And the reporters didn't necessarily understand exactly that entire concept that, this is a real company. We have real employees and we have a lot of employees to operate all of the equipment that we're operating on site.
All you got to do is go to a site and watch it being built, and you will know that it provides a lot of jobs. These massive sites that take years and years to build create jobs for people that would have been working in the oil field or other industries that had a downturn. And so when you look at the cycles between energy and Bitcoin, if energy's prices are low, that's good for Bitcoin miners. So it gives a natural offset to hedge that labor force. Obviously, the growth of mining will continue, and even if they've finished a facility, they're going to start on the next one. There's no end in sight. This industry is not going to stop building. I mean, by definition, it has to keep building, and so that will continue to provide jobs for that industrial labor for years and years and years to come.
I think the confusion, honestly, comes from Bitcoin being bracketed with crypto, and crypto being viewed as this whiz-bang digital thing, like the new hot, sexy thing. And Bitcoin is not crypto. Bitcoin is not proof of stake. Ethereum doesn't need a Bitcoin infrastructure, but Bitcoin does. That's what makes Bitcoin quite unique, the proof of work, the physicality of it, right? Bitcoin mining is a physical business. It's a physical attack surface. Bitcoin is much more secure than Ethereum and some of these other protocols. And so that's where a lot of the confusion comes from, because you've got this huge, large-scale physical business that's essentially an energy infrastructure business connected to the grid and sometimes off-grid, et cetera. And then you have this digital asset, Bitcoin, the money that can trade wherever it trades. So there are times where the cost to mine a Bitcoin might be $15,000 a Bitcoin, but the price might go to $180,000 a Bitcoin. And there are other times where the price might be $15,000, dollars, and the cost to mine is $20,000. And in that environment, obviously, the miners are in a lot of pain. But the reality is, in order to support the growth of the protocol, these companies need to continue to be built. They need to constantly be growing. It's a treadmill. If you're not getting bigger, you're becoming uneconomic over time. And so you've got to constantly be raising new capital, building, and hopefully maintaining profitability through the full cycle.
That's a good point. Also, the symbiotic relationship between energy and Bitcoin mining, how Bitcoin mining steps in, creating the economic impact that energy cannot when energy cannot, as well as the jobs that we talked about, which are already a lot. Like if you go to a mining facility, you will see jobs that you wouldn't see in the media otherwise. And when you're talking about jobs, you're also creating, you're also uplifting the talent pool in the local area. And these are areas that do not necessarily have many economic opportunities or industries operating. So various benefits there. Now, we often hear in the media, mainly from Bitcoin miners, that mining is benefiting the grid in various ways. I think the audience here may find it interesting to learn from miners or people associated with mining companies or power companies that are partnering with mining companies on how exactly the grid benefits from mining. And because when we talk about economic impact of mining, the grid benefits are way more than just the taxes or the money that is being generated from the mining operation, because infrastructure is something that America really needs, and that benefit is way more important.
To kind of take that topic, it starts when the facility gets interconnected to the grid. So the miners, they will post tens of millions of dollars to the utility that is immediately invested into infrastructure. And so the grid is getting upgraded at the cost of the miners. Then when the grid needs that infrastructure the most, the miners are turned off. So now they've paid for infrastructure that allows it to create a more stable grid, and they're not using it. So every other user on the grid gets that benefit with no cost to them. So that's the first and most simple part. And then we can get into the demand response stuff, but I don't want to take up all the...
I guess I'll talk about demand response. And I think the simple factor is that, you know, you spend all this money on grid interconnects, and if you go back in time and you think about, you know, connecting to the grid, the liquidity that's required, the cash that you need to support it. And I think that's where the problem comes in, is that several users, you know, users outside of Bitcoin mining, consumers, whether it's residential, industrial, don't understand that a 100 megawatt contract that you have for 10 years in the state of Texas, potentially you need $20 million to $40 million of cash to support it. So when you sell your power, or you offload, you turn off and you support the grid, and you're paid at a peak price, that difference is because you took the value of your money and you invested it to potentially be paid, just like buying stock, just like any of those, buying land, any of those components. What happens is there's this bad narrative that people don't realize. Without that contract in place, that power cannot be used by others. And so that demand response that's in place is why the miner turns off, because it's economically more beneficial to them, because they invested $100 million, $200 million, $300, $400 million to build their infrastructure, and they're trying to get a return on their investment. No different if it was an oil company, no different if it was an industrial plant or any of those things. We just have to be conscious socially of how we communicate that, and that's where I think our biggest challenge is.
Yeah, I mean, there are power programs like this across the United States. It's not just in the state of Texas. And so we participate in programs in places like North Dakota and North Carolina that allow us to turn off when the local grid needs it. And for us, that's not only a big benefit for us, but you can also see it in the local community. When there are time periods where, you know, the South gets hit with some sort of a winter storm, you know, not just a winter storm that occurred in Texas in 2021, but there are storms that hit all parts of the Southeast. And so when we think about what we're doing, it's not only turning off and participating and oftentimes getting paid for turning off, you know, it's because you're getting paid for a service that you're providing to the local community and to the local grid. 100 megawatts just doesn't come out of nowhere. It's not like someone just builds a 100 megawatt natural gas generation site overnight. So for us, when we're able to turn off and provide 100 megawatts back to the grid, that's 100 megawatts that otherwise would never be able to be profitable in that area outside of those very minute time periods where we're actually turning off. You know, maybe it's only 20 hours or 100 hours a year. That's not enough for a 100 megawatt peaker plant to be profitable. And so what Bitcoin miners provide is actually a very unique capability that provides a large amount of megawatts to local grids in times of need.
Yeah, and I think Bitcoin mining, the industry broadly, is probably one of the most misunderstood and underestimated forces in business anywhere in the world today. And a lot of that is we've never seen anything quite like it before. There's not a large-scale user of power that's completely location agnostic, completely intermittent, can stop and start at any point because the protocol is sort of probabilistic. So you can stop your process and then turn it back on again without damage to the machines. And so you've got this huge power user to create demand for the utilities and the power companies, but then they can just shut off whenever demand starts to go up too much for other users. Those other users are not as sensitive to that. Those other users can't turn off. Maybe they're mission critical, maybe their process creates a lot of waste, let's say with like an aluminum smelting plant or something like that. Heavy duty industrial can't shut off because if they shut off at step 6 out of 10, they lose the whole process and it's highly wasteful. Bitcoin mining is not like that. So again, I just think the narratives are sort of wrong on this. I think in 5 or 10 years, it'll be very clear this is one of the most significant economic forces in the history of the planet, not just the modern world, but in the history of humankind on the planet. And so I think people will recognize that. And that's why I think it's such a significant investing opportunity as well.
Only thing I'd add to that is miners are the first type of load that's been able to be responsive, right? There's new loads that are coming, like a hydrogen electrolyzer that can turn on and off very quickly. Technology is grouping smaller assets that can also be flexible and participate like a large asset. So that volatility is coming to the grid as people change their behavior. And when we sat down with ERCOT 2 years ago, and with a lot of people that are in this room, and we said, what are you guys scared of and what do you need, right? It was very clear that this was different. Miners, our point was it's coming. People are going to be using and turning on and off. The fact that the miners are first and they're all sitting here in the room asking the grid operators what they need and how can we be good stewards, like that's not going to happen in other industries. You're not going to have that same community feel and that openness and miners sitting down and willing to say, how do we do this right? Other industries are just going to do what they want to do and they're going to fight it in court as opposed to asking the right questions up front. And so it's been really cool process to see work through with the stakeholders and your companies to ensure we're responsible and, got to keep educating.
So we talked about regulations. We talked about how taxes are benefiting the economy. We talked about jobs. We talked about the grid stability and the strength that mining provides to the grids. There's and the jobs. We also talked about how mining creates jobs and technical skills that, again, uplift the area. Now, there's also examples of various companies that are investing in the infrastructure outside the grid when they create the data center in these usually suburban communities. What are those benefits that you've heard of that miners bring to the area? Infrastructural benefits or other benefits that have an economic impact that is outside what we've already discussed. Some examples that I've heard of are miners investing in the roads, because often these sites don't even have roads to where these sites are. Miners investing in even building pipes or plumbing stuff because that doesn't exist in these sites. So they're creating all this infrastructure, and next time they need to create maybe a shop near where the employees can go and get something to eat. The shop will use all this infrastructure, and the shop is not owned by the mining facility. These kind of benefits.
I'd probably say the best example that would relate to like mining, because they're going to build a road to get to their facility. They're going to bring in a pipeline to get to their facility where that might not interact with the community. But there are several organizations that are creating continued education programs for people that are outside of high school that didn't move on to college. That program is an infrastructure and education that then does exactly all the things you said. It creates the job, it uplifts, it creates a tax base, it does all the things necessary. And why mining Bitcoin in rural America is the solution to a lot of these problems. You literally take the person that maybe worked at Speedy Oil Change, you're like, hey, we can train you. Are you willing? And you use a program that's incentivized through the federal government and state to train them and then provide them that vehicle to literally change their life, their family's life, that community's life. And it literally starts with the machine that has the cable that plugs into the network, that plugs into the outlet. It's that simple.
Yeah, I mean, something that we saw during COVID was obviously, a lot of restaurants were struggling during that time. And we actually had our employees on site throughout COVID. And we had to order a significant amount of food. And there were many restaurants that reached out to us after, and they said, without you guys, we would have never survived COVID, because we were the only people that were showing up every single day, ordering hundreds of dollars worth of food. And it was a very unique situation where now when we go back to those restaurants, they're like, thank you. Thank you. We appreciate you guys being part of this community. And that just goes to show, it's like when you're in a small community, people recognize who you are. They recognize what you're doing. And oftentimes they say, someone came in and was talking negatively, we stood up for you guys. And those are the moments where you realize the impact that you're having on the local community, because in many of these communities, each person is only one person or two people removed from someone that works at your facility, which is completely unique. You're walking into an area where it's someone's brother or someone's, cousin works at your facility, and they want to talk to you. They want to learn more about what's going on at the facility. And so those are all the positive impacts that a lot of people don't recognize that we have on local communities.
Plenty of examples of fixed swimming pools and new stadium lights, and the list goes on and on. These companies have been really awesome in their local communities, and you don't have to dig very far to see how they've been very kind with their time and their money, and really made positive impacts on children and communities and schools, and it's on and on.
And the Bitcoin miners are investing out in front of the curve, building the future that most people can't see yet. And my final comment on this is just that I just think in a year or two from now, a lot more people are going to recognize some of the things that we said. The mining industry is still somewhat depressed right now. We're all very bullish and we all believe in the future of Bitcoin mining. But if you look at the stock prices, you look at the availability of debt capital, you look at some of the other indicators that I use, the industry's in the toilet. And that doesn't really make sense if you, on a point-to-point basis, look out 24 months and you think about where this industry is going to be at $100,000 or $150,000 Bitcoin. So my recommendation is that people should be supporting the industry. Now's the time to do it if you want to be a value investor.
That's a good note to end this panel on. Thank you for coming here, guys. Thanks for participation. Thanks, everyone, for coming to watch us.
Thanks, everyone.
Hey, guys. Thanks for coming out to the 2023 North American Blockchain Summit. It was the best summit yet. We look forward to hosting you again next year. If you enjoyed the summit or like what you saw in this video, be sure to subscribe. If you're interested in learning more about membership in the TBC, go to texasblockchaincouncil.org to learn more.